Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Presenting for you this morning is Melbana Energy Executive Chairman Andrew Purcell and Chief Commercial Officer Chris McCowan, who will review plans for the development of the Amistad Unit 1B, as well as discussing results of the recently drilled Alameda 3 appraisal well. Both Andrew and Chris will give a brief overview on this progress and will be on hand to address any questions following the presentation. We have been inundated with questions, which is greatly appreciated. However, if you wish to ask a question live on the webinar, simply raise your virtual hand and I'll endeavour to accommodate your question. Please refrain from any inflammatory or offensive language, and we will attempt to get through as many questions as time permits. You can download a copy of the presentation by navigating to the handouts pane in the control panel. Finally, a copy of the webinar will also be available on Melbana's website and social media platforms later today. But for now, I'd like to throw it over to Andrew to kick things off for us. Andrew, the floor is yours.
Thank you very much, Alex. Good to be back with you again. Thanks for setting the forum up. I want to give a very short introduction speech on a presentation that hits some of the issues I think many of you are most interested in. We'll have a quick look at what's been happening, what the forward plan is, but the point is to get through that, set the framework so we leave as much time as possible for Q&A at the end. So Alex, if we could go on to the next page. We all know the layout of the subsurface, I'll assume. Most of us have been following the story for a long time. I'll first just give a recap of the Alameda 2 appraisal well that we finished last year. That was the upper reservoir broken into a number of units as shown on this diagram. Next page, please, Alex. The drilling of that well happened very well, very quickly, very safely, inside time and budget. We managed to do all the TD, all the tests, the DSTs. We got to TD, and we found oil in a number of the units, but the most interesting one was Unit 1B. That flowed at a very good rate in the DST of relatively very light and sweet oil for Cuba. And that's the thing that we have then subsequently received a contingent resource for 48 million barrels for. From that date, that's been the focus for our team on getting that into production first. And I'll give an update as it's progressing later on in the presentation. But if we go forward, Alex, to the next slide. That's the lower two reservoirs, the Alameda and Marti, which were the subject of the most recent appraisal well, Alameda 3, that just completed. Next slide, please, Alex. That was a different tale, as we're all aware now, although we, thankfully, as always, I'm happy to say in Cuba, safely drilled the well. We got to target total depth, but not without a number of challenges. Drilling in large, deep wells sometimes inclined to do. We went a long time over time and budget, and we did manage to do the testings of those lower two reservoirs. So technically, picked to all the objectives of the well, but commercially, that wasn't what we were after. We were after flow tests from those two deeper reservoirs because of the oil that we know exists down there and which flowed rather enthusiastically to surface and the original well, Alameda 1. Now, the offset between Alameda 1 and Alameda 3 is minimal, and we haven't been able to get a flow to surface, and that has been a surprise and a disappointment to a number of observers of our company, not least ourselves, our partners, and the Cuban regulators, all of whom were expecting a different outcome. So the question is why? And that's the bit that we now need to turn our attention to while we get on with developing the upper sheet before we come back and apply the techniques that we're looking through at the moment to decide what's best to do here. The well's suspended, and therefore we have no immediate need to go back in there and do anything without considering it well. Next slide, please, Alex. Otherwise, as I said, the real focus for Chris and myself and the rest of the team on the ground here is getting the production from Unit 1B started. In that respect, we've been busy all year getting everything in line for that to happen. We've made a lot of advances on the logistics train, tank storage allocation at the terminal, permitting of the additional drilling pads. We've socialised the Unit 1B development plan with our partners and the regulators. We have received permission to export all of the joint ventures entitlement to oil from Cuba, so we can send it out of the country and get paid offshore. And that has been a very satisfying process to see the interest that we've received in our project for this new supply of well-demanded oil in the markets. In parallel, we've been running a farm-out process with an advisory group that we appointed in this part of the world, in Latin America, to attract farminees into the project that can both assist us with the development of the field, but also the objective of a farm-out process is to have somebody come in and pay for the next step of the work. And that process is coming to a conclusion now. Chris will talk a little bit more soon that in parallel, we're also having discussions with oil traders for the offtake of the oil and looking at commercial arrangements with them as well in return for the right to take off some of the oil. And as always, as part of the financing solution, we're very thankful and happy to have a very large national oil company at a 70% partner that has been underwriting most of the expense of the work to date. Next slide, please, Alex. So the question mostly at the front of our minds, and I know most of yours, is what happened in Alameda 3? Well, we had a long, difficult well, and that was despite all of the learnings from the previous well and all of the expertise that input into the well design, the drilling operations, not only internally, but through our partners and regulators. And that was a challenge for us from almost the get-go. We had hole stability issues, we had up drilling conditions, particularly given the hole sizes, and inadvertent side tracks, we had stuck tools, but we overcame all of those things eventually and got to TD. We managed to get some very good quality logs in all the sections, took good pause. They're all suggestive of some very good sections for permeability. And the fact that despite all of that suggestion, data from the logs and the previous learnings from Alameda 1 that we failed to flow to the surface from both of those sections, from both of those geologically independent sections, it points to there being something going on, with the reservoir damage, perhaps with what happened, how we drilled it, the fluids that we used, maybe the time in hole, given all of the additional delays we incurred because of the problems I mentioned above. But that is stuff we're working through now. We've, as I said earlier, suspended the well. We're just going to step back and have a look at all that data that's coming out of the hole now, compare it back to the logs, compare it back to the geochemistry learnings that we're going through, and consult widely. We're interested in the feedback of our partners, the regulators, but there's also a number of experts globally in these types of reservoirs. These carbonates are a particular type of problem to sometimes solve, and we're not stopping from going out to where that expertise lies to have them look at what happened in our data, and we're incorporating all of that into the reviews we're doing at the moment to come up with a remediation or next stage plan in the well to go back and get that oil out that we know is there. Next stage, please, Alex. Forgive me, a bit of delays here. I'm in Cuba at the moment, as perhaps you weren't aware, so there is a bit of a time lag. The main thing while those studies are going on, and indeed regardless of what the results were from the Alameda 3 well, our focus has been, as I said at the AGM last year, is to start exporting oil from Cuba this year. And that's a goal that we're still committed to. You know, we are in the process of getting ready to recommence production from Unit 1B. There has been a drop in production from the 1B reservoir. Initially, we floated at 1200. You'll recall it peak float at 1900 when no choke was on it. And then we shut it in. And after a period of time, it had been shut in, we went back and opened it up, and it was at 300. So there's immediate change in the reservoir's performance for reasons that we've been looking into. And we believe we have some leading candidates as to why that is the case, particularly from learnings from our Cuban partners that have a lot of experience in this upper sheet in these carbonates and have experienced similar drops in flow rates due to reservoir damage issues. And their learnings of how to fix them are very high on our priority list of what we're going to try next. But we are going to finish our study process before we do anything. But Unit 1B is the beginning. What we have is a plan in our development of Unit 1B to, in the short term, drill another 7 wells up in the Unit 1B on this 2D seismic control. That's going to happen over the course until the end of 2025. And we'll do a continuous program and hopefully get a repeat of the 0 issues we had drilling that initial Amistad well down to the bottom of Unit 1B. We did it quickly. We did it well inside our best estimate of time and budget. So we hope those wells can go quickly without issue. And then we got 7 more producers online quickly. And that program will then continue beyond 2025. Once we have 3D seismic to control the placement of the additional wells. And that is in total designed to recover the highest confidence oil we have from the contingent resource that we were awarded by our independent resources certifier. That's the 16 million barrels. But then beyond that, we're going to go for the rest of it too. But we want to start with the program that's going for the lowest risk oil that we know is in that upper sheet that's easiest to recover. From there, we have all of the options in the world available to us. Once we've got that reservoir up and running reliably and exports happening and revenue flowing, then there is the deeper sheets to go back. And once we've done our work earlier, we'll be looking back at those to add to the field's capacity to produce oil. But it's not the immediate priority. The immediate priority is to get Unit 1B up and going. Next sheet, please, Alex. I've just put a simple cartoon in there to show the locations of the additional wells. The diagram in the top right is probably a bit hard for you all to see, but the Alameda pad, the one that we currently are drilling off, is in that circle in the top right. The new pads are all offset to the west and south and southwest. So those additional pads are all being permitted up at the moment. It gives us a number of different areas to attack the 1B structure at optimum points, and the trajectories of the wells have been selected to allow us to get maximum interception of Unit 1B. It's important to remember that Unit 1B in the Amistad well was behind casing, and we perforated it at what we considered to be optimum areas, because from the logs. But that was a very large net pay area. And the objective with the new production wells is to not have any casing. Let's just open up the whole hole across the whole productive interval and let it all flow. Open hole initially, and as the Cubans do, and have a liner ready to insert it if we have hole stability issues. But let's let it show us what it can really do when we don't have to have contingencies built into the well for reaching different depths and trying different things, as all of our wells to date have had to do because they're scientific appraisal wells. Now it's time to just build production wells as quickly and as cheaply as possible. Next slide, thanks, Alex. We get into the logistics side of things from day one, from where we are. There's a deep water oil terminal about 80 kilometres to the west, which we'll be trucking our production to along highways, good sealed roads, flat terrain, no issues with moving trucks out to there. And that'll be perfect initially because it means we don't need any infrastructure. We can just start filling the tanks on the wheel pad, trucking them out to the storage facility at the port. And from there, once we fill those tanks up, we call the traders to come and pick up the oil. We're very thankful to QPET and the assistance they have been giving us, as always. They're a very cooperative and helpful partner in this project. They've got tanks available at the deep water port that they've allocated to our exclusive use, so we don't have to commingle our oil with their production. We're going to bypass their other offer to move the oil initially to their battery at Faradero, sort of underneath the box that says truck route, which is closer, and then use the pipeline that they have between there and the port to move our oil in batches, because it's just one more degree of complexity in the short term that we want to spend more time studying to get our oil out as fast as possible. But in the medium term, that's going to be a much shorter trucking route as the volumes increase, and it gives us processing facilities there that we'll be able to use to move the oil down to the port. Next slide, thanks, Alex. This is a diagram of the port. You can see the tanks down in the bottom left. We've been allocated one of the larger ones there at the moment, but there are smaller ones we'll use in the short term that are available for the initially low volumes of oil that we'll be producing, because step one is to get a cargo out. And the reason for that is to test our logistics train, to test our commercial arrangements with the offtake counterparties, the moving of oil, the selling of oil, the getting paid for the oil offshore. That is something that is good on theory. We understand how it's going to work, but let's test it. It's good to do it initially with whatever size cargo we can get going, and then build up to the bigger, more economical size cargoes in the year ahead as the other wells come online and we get to the target production rate from this first stage of the Unit 1B development that we're aiming for. Next slide, thanks, Alex. A simple diagram showing the work streams that are underway at the moment. As we sit here today in July, we're doing a number of studies, of course, on the simulation formation damage on Unit 1B that I mentioned earlier. Other parts of the team are working on the export facilities, the trucking arrangements, the storage arrangements on site and at the port. And another part of the team here in Cuba is doing all the permitting and getting ready for the construction of those pads that's coming up in a while once the wet season starts to die down, although I must say there's not been much evidence of it this year. Thus far, knock on wood. So that trial export that I mentioned, we're going to get out by the end of the year. There's our goal. And in parallel to that trial export, we're doing work to repair and get the larger tanks that have been allocated to us to a standard that the Cuban regulators and ourselves are happy with before we start filling those tanks early in the new year, with I hope a first good-sized commercial cargo going out by the end of Q1 next year. Next slide, thanks, Alex. I think this is a slide better spoken to by my colleague Chris on the call, because he's been the one doing the heavy lifting on all of these commercial arrangements. So Chris, perhaps a quick summary of what this data means on this page.
No problem. So as Andrew mentioned before, we've been moving things along in parallel because the ultimate aim is to export the oil, because we know that it's a good quality oil and it is attractive to market. and that will be done under an agreement with the parties. So we've got the right to export the entire joint ventures of oil. So that's been an excellent alignment between us all, and working closely with the engineering team on all the agreements required for that to get the trucking and the storage, etc. And then finally, as well as talking to oil traders about them buying the oil, many of these oil traders actually enter into agreements where they will essentially provide funding for the development and the acceleration of the development. And we're doing that in parallel with discussions with potential farminees. And that farminee process, as was mentioned earlier, is at the advanced stage, and we're in the term sheet stage now. So it's all about moving it all together in parallel, because ultimately it's about making oil from producing, making money from producing the oil, and that's what we're working really closely with the engineering team on. So yeah, that's enough on that.
Next slide, thanks, Alex.
Thanks, Andrew.
That brings us to the end of the short presentation. So over to you, Alex.
Thanks very much. Look, Chris, Andrew, really appreciate you taking the time to present. Now, before we get into the submitted questions, just a reminder that if you want to participate in the live Q&A, simply raise your virtual hand. I will call out your name and allow you to take yourself off mute. Please make your question brief, and please refrain from any inflammatory or offensive language. To start, we'll start with some of the submitted questions first. Andrew, do you think the quality of the oil contributed to the inability to flow, or was fracture permeability impacted by mud, or was it just low permeability?
We don't know until we finish our work. The oil quality is good. We know that from the first well, seeing it come out over the shakers, even though we couldn't get an uncontaminated sample. It was flowing at such a rate that it was coming out over the shakers well on top of the mud, and it looked light. We've managed to get samples this time from Marti, although in contaminated samples, we separated, dehydrated, cleaned it. It's 20 API again-ish, so it's not heavy viscous oil, so that's not the issue. And the logs show, certainly in some sections, even more than others, good permeability throughout. So watch this space. We each have our suspicions. There's a number of opinions as to what happened, but I think we've got everything correct down there, other than how we drilled it may have affected the formation, and we have to learn from those lessons to do it better next time.
Is it possible for oil from Marti and Alameda to flow to the surface, either assisted or unassisted?
Well, we know it's possible. As I said, it flowed at us in Alameda 1 from both of those reservoirs, unassisted and quite vigorously.
And what input did Sonangol have in the drilling of the Marti well?
Complete. They're our partners. So as operator, it's our job to put together a drill plan. That drill plan is tested with our partners, challenged. We have workshops or drilling the well on paper where we go through it and the contingencies we might have to employ if A or B happens. Then we have regular technical meetings with them, and then ad hoc technical meetings with them when issues happen in the drilling of the well, where we tap into and use the brains trust that exists in that organisation to, decide the best course of action and at any decision point in the well.
And in your view, did you stop too soon? Was Marti Alameda just a flash in the pan instead of a long, steady producer?
We stopped too soon. I mean, we stopped 40 metres higher than where Alameda got to, and long-term observers will remember that Alameda 1, when it got down to that last 40 metres in the Marti reservoir, the pressures got extremely high and borderline dangerous. So we stopped a little bit higher. I don't think that's an element of it, no. And the rest is, I think we've answered.
Andrew. We've had one question from Tony Camilleri. Tony, you should be off mute. The floor is yours. Tony, are you there? Tony Camilleri? We're having some issues with Tony asking his question, so we'll move on. We'll move on with the questions. Now, in terms of the remediation steps, why did Amistad 1B's flow rates reduce to approximately 300 barrels a day over the 9+ days extended flow test?
Didn't reduce over the extended flow test. The initial DST flow test flowed it on choke, 1200 sustainably. We then shut the well in. We went away to do other things. We came back some months later, and when we opened it up again, it was at 300 barrels a day. The culprit is how we shut in the well, I think, is the leading candidate. You know, these carbonates are, you know, they're crumbly, chalky rock. So you've got to be very gentle with them. And the way we shut it in is suggestive of reservoir, near wellbore reservoir damage. And that is a learning that the Cubans have had here a lot in these upper sheets. Their preferred solution is to run what's called an acid wash. And what it does is it gets in there and it ungums the works near the wellbore. So the oil has a migration path back into the wellbore. And so that's a leading candidate for how we will remediate it. But to answer the question, I think that's the reason for the drop in that flow rate.
So when will remediation of Unit 1B be executed, and what confidence levels do you have that this will work?
We're planning to kick it off very soon. Once the pad site has been reconfigured for the testing and the logistics train for the transport of the oil and storage at the remote end is ready, before the end of this quarter. Confidence levels, you've got to be confident in this game, Alex, because they keep throwing surprises at you. But I don't find this to be uncharted territory in this upper sheet. This is where the Cubans have produced 100% of their oil in their history. This is their home turf, and they are giving us very good advice.
So why don't you go back to the old mud system and drill a sidetrack or lateral bore in Alameda 3?
Yeah, that's the old mud system. No, that it really was not a good formulation for well control purposes. The mud system we have this time is much better at that. A sidetrack out of Alameda 3 in Unit 1B, I've asked the same question, challenged my team with the same idea, and it's possible. And it's not no, but it would mean that means making a decision on the ability to go back and do what we want to do in Alameda and Marti at a later date. And getting into Unit 1B again with another well is quick and easy. So it's not a good trade-off, I don't think.
And what's the view of Sonangol and Cupid on A3, on the Alameda 3 remediation plan?
Like us, surprise and disappointment and learnings. You know, I think they're both very experienced national oil companies who have portfolios of projects, and they're more sang-froid about issues when they happen in drilling than we are, because this is our game. This is everything to our company, and so we are and we're operator. So we're at point. Their attitude is comforting often to me when things happen. Is like, well, let's work the problem. How do you think we should fix it? And I'm very appreciative of that, as are my team.
Thanks, Andrew. Now, just a reminder for everyone, if you want to ask a live question, please raise your virtual hand and I'll get to you when we get to it. Now, in terms of the development plan, Andrew, how many wells are going to be drilled into the Amistad Reservoir, by when, and how will they be funded?
First stage is those 7 wells I mentioned that we want to get in starting soon and get the 7 drilled before the end of next year if we can, but the target is by the end of next year. The funding of those, we're looking to 2 sources: farminees who want to be part of this large discovery in the upper sheet, and the oil traders who Chris mentioned talking to us about facilities to finance that work in return for the right to offtake the oil.
Thanks, Andrew. Now, I've just allowed Frank Cunningham to ask a question for the purpose of this webinar. Frank, I've just taken you off mute. You should be able to ask a question if you take yourself off mute. Frank, have you got?
Yep. Okay. Thank you. Just a question around the 3D seismic. What's the timing on that? And is there an ability with that to look at the deeper structures as well as the structures that are more shallow?
3D seismic plan was part of the forward work program to kick off shortly. I have put a delay to that because what we're going to do with the next stage is the funding has to come from third-party sources, and everybody wants to see some production and earnings to get this business model in Cuba self-sustaining before we start expending on more exploration work. And I know my exploration manager would squirm to hear me say that, because the 3D seismic's an essential way to not only optimally position the additional Unit 1B wells beyond next year, but yes, it is going to be valuable for not only positioning those wells and lateral wells in the forward plan down the road in the upper sheet, but also to give us better understanding of the subsurface in the deeper sheets. Now, geos have had to do everything they've done based on a number of vintages of 2D seismic, which in heavily folded geologies is even more complicated than it would be otherwise. They've done a great job, but we need to give them the tools that they know how to really get the most out of.
When it does go ahead, will we get a view of the structures further to the, what is it, east of Block 9 as well, where we were at Zapata earlier?
Yeah, not quite as far as Zapata. The area of interest is more to the north, west and south of the pad where we're at the moment, because those have more immediate understanding and greater appeal to us in the short term.
Thank you.
Thanks, Frank. Now, Andrew Fawcett, I've taken you off mute, so you should be able to take yourself off mute and ask a question if you want to. Andrew Fawcett, you're off mute, and you can ask a question of Andrew and Chris if you like.
Thanks for that. Well, thanks for the update, Andrew. Just wondering, do you have an understanding of when the net gross figures should come out for Marty/Alameda?
I think that's work that will come out as part of the natural course of the interpretation of the logs we've just received, Andrew. It normally takes months, by the time the guys do all their work and analysis, and then we present it to our partners, etc. And it's ultimately not as high a priority for me, for them at the moment, as what we're doing in the production in the upper sheet and the understanding of what went wrong in Alameda 3 to come up with a remediation plan.
And also, just wondering, so the first consignment of oil that's going to be sent out, how much oil do you want to send out the first time? Because obviously,
that depends. I want to get a shipment out. It doesn't matter how large it is. It's a minimum size to fill a postal tanker that ply the waters of the of the Caribbean. So, 5,000-10,000 barrels of that order is enough to send to a refinery to allow them to do what they do, and us to demonstrate the commercial chain, and for them to properly analyse the use of the oil.
And therefore, the plan is to then announce commerciality after that point, or just wait on seeing how it goes in that sense?
No, that won't be the final decision point for us for commerciality. For us, it's demonstrating more than one producing well, I think, is an important variable in addition to establishing that oil sales pathway.
And during confirming, have the extra drill pads been confirmed? Have they been approved in that sense?
Yeah, they have begun to be approved. We've got a number of them. We don't need them all approved at once, obviously. But the first ones, the first priorities, they've received their initial approvals for us to start construction. And the rest are at different stages of approvals. But approvals in Cuba is like clockwork. It's not like Australia. The process takes a statutory amount of time, and you work through the process in that time, and you can put it into your slide rule and it pops out when you need it.
Okay, thanks for your time.
Thank you.
Thanks, Andrew. A couple more submitted questions, then we'll go back to the floor. How are you transporting the oil from A to B? And is Coopet coming to the party on required infrastructure?
Initially, we're trucking. We're very lucky to be close to the oil terminal. It's sealed roads all the way, as I said. There's trucking contractors as well as the National Oil Company available to us. It's minimal infrastructure required from us. They pick it up on our site, they drive it to the terminal, they dump it into the tanks, and Coopet are definitely coming into the party by providing available storage tanks for us to use, dedicated storage tanks with flow connections to the port from the tanks, access to the pipelines, to their processing facilities at the battery. It's a sheer pleasure to be working in this country with such a regulator.
And so what is the plan for the Sherritt 1 rig over the next 6 months?
Well, we've released it now to get it off the pad so we can do our production. They've gone off to drill another gas well for their plant. They're in their gas plant near to the west of Varadero. That's a 30-day program for them, and then their rig's available again as early as late September.
Thanks, Andrew. We'll go back to the floor. Andrew Scott, I've just taken you off mute. If you want to ask a question of Andrew and Chris, please take yourself off mute and do so.
Okay. All right. Well, thank you. Can you just tell me what's on offer to the potential farminees? And is that an offer from the JV that is the way it's structured? And flowing from that, how do you see your position in terms of financial liabilities through to the point where you start to receive sustainable cash flows coming in?
Farm-out deals can be structured in more ways than you and I have had hot breakfast, but what we're looking for is the attraction to the partner. Where we have got to by getting a 50-odd million barrel contingent resource award, that's as close as you get to having reserves, with the missing bit being the financing of the field. And that's the bit we're asking farminees to solve. You've got an existing oil business in many countries, and there's examples across Latin America. You've got infrastructure for producing oil and experience doing so. We could benefit from that experience in building the oil field. Here's a 50 million barrel discovery ready to be developed. We de-risked it. You come in and you pay for the field's development, and we'll negotiate you having a percentage interest in the field.
So that's you negotiating, or you and Sonangol negotiating?
We're negotiating as operator on behalf of the Block 9 investors, ourselves and Sonangol.
Okay.
But as I said before, everything we do, we talk very closely with our partners because they have a lot of experience. And so it's of great benefit to us to get their input.
Okay, thank you.
Thanks, Andrew. Now, Tony Camilleri, I've just unmuted you. If you want to ask a question of Andrew and Chris McCowan, you can. Tony, have we got you? Tony, you're live on the webinar. We must be having some issues with Tony. We could hear you, but we couldn't quite get you across. Now, Dan Pickering has offered to offer a question for Andrew and Chris. Dan, I've just taken you off mute. If you wanted to ask a question.
Thanks for that. Yeah, I was just wondering, do you take wireline pressures across both Alameda and Marty, and were they like a consistent gradient across each zone?
That's it. Chris, that's your question.
Yeah, well, what I'd say is we definitely did all the logging that we've needed to do. In terms of actually the analysis, that's something we're working on.
Okay, thanks.
Thanks, Chris. We'll go back to the submitted questions to finish off. We've got a few more to get through, as well as some more questions from the floor. Now, Andrew, where are we at on an oil sale contract?
Well, Chris, 2 in a row for you.
Yeah, it's a labour of love for me. It's been an excellent experience in that we, getting some oil samples that we've had assayed. So we've got that undertaken that shows the type of API of the oil, the sulfur content of the oil, the acid content of the oil, and the metals in the oil. And essentially, this is a crude that is attractive regionally and globally. There's quite a lot of desire for these kinds of crudes across Latin America and Europe, and also in Asia. And that's something that the first step was to get the assay done. And then we've been talking to oil traders about, the attractiveness of this crude, and as I said, it is attractive to them. And the scale of this project is of significance. As Andrew mentioned, we've got like 48 million barrels 2C, not to ignore the 90 million barrels prospective as well, and the other units that we just announced this morning. We've got 32 million barrels in other reservoirs in this structure too. So this is a sizable project for them. And so we're at that kind of term sheet stage with traders, and working through the process of coming to a landing in some of the agreements for that. And also looking at the ways of working with the traders about things like structured finance. Again, this is something that these groups have got extreme experience in. They've done it loads of times around the planet. And so we're getting close.
Thanks, Chris. Now, when will you be issued with a production license?
When we ask for it, when we present a plan that's acceptable to the regulators. But that's what we did a couple of months ago here in Cuba. We had workshops for a week, firstly with our partners, our Angolan partners, sent across a large delegation for a week of presentations by myself and my colleagues from Australia on the development plan. That was then socialised with the regulator, incorporating comments from our partners in anticipation of presenting the request for a, you call it a production licence. We don't need any such thing under a PSC. All we do need to do is to say to the regulator, we think we have this now. We think there's oil that we can produce, and we'd like your permission to produce it in this way. And that was something we were planning to do this month while I was here. But with the results of Alameda 3, we'll just take our foot off the accelerator a bit there and get more studies going on what happened in Alameda 3. And probably the decision point for that now is once we get the next well into Unit 1B. Having 2 wells producing is, for me, in addition to the commercial offtake arrangements that we want to see the oil sold, I think they're the last things that to go into a final investment decision.
Thanks, Andrew. We'll just go to the floor for one last time for the webinar. James Karakatsanis, I've just unmuted you. So if you want to take yourself off mute and you can address a question to Andrew and Chris.
Thank you. Thanks, Andrew. The phase 1 unit 1B development wells, the 7 proposed there, what's your confidence in that resource coming in as expected, given that if I'm looking at slide 13, it looks like some of those well pads are spread across different structures?
They're all on the same structure. They're all connected. At least it's the same connection of oil, even though the structures have different highs and lows. So that unit 1B is being drained from different positions in the one structure. And for the confidence side of things, it's the highest confidence we have relative to everything we're doing. Given this is how, as I've said, Cupid been producing oils for its entire history from these upper sheets. They're easy to drill. They're uncomplicated. We've done it now several times, and every time we've had the same results drilling down through these upper sheets. So, there's reason to believe, without allowing our friend Mr. Murphy to hear what we're saying to each other, that this is going to be the lowest risk of anything we're doing in Cuba.
Okay, and let's just say everything goes to plan with those development wells. You get the finance, you're sort of up and running. What's the project economics look like, just on a high level in terms of free cash flow?
Well, there's a couple of analysts that have done all this work. I don't know if you have access to some of those brokerage firms. Pac Resources very kindly did some research, as did Petra Capital. The economics are very compelling for two reasons. One is that there's very little infrastructure requirement, and therefore the cost of production is first quartile, very low by global standards. And the second is that the quality of the oil that Chris said is in demand. And so at these buoyant global oil prices with a very low cost of production, and I would overlay one additional variable there, is that the fiscal terms of the PSC in Cuba are also very generous in that they allow us as a priority to use a large percentage of initial oil revenues to repay ourselves for past costs as well, to give us enhanced share of early production. So without getting into probably numbers here, they're compelling. The economics are compelling.
Okay, and sorry, just one last question. What's your biggest concern or risk do you see with this development going forward?
Well, the unknown is always the biggest risk, and that's why we take a lot of time planning and thinking and benefiting from experience. But, we're now a very experienced operator in Cuba. We've been here a number of years and have done a lot of wells. Our drilling contract has been here for decades and produced 200 million barrels in that time, and has all that accumulated experience in-house. We have a regulator that's supportive. It's a resource project at the end of the day, and it's like any project. Things go wrong, but I think this is the lowest risk way to commercialization that we have come up with for Unit 1B in Cuba, and I'm confident we'll deliver it.
Fantastic, Andrew. We'll finish off with a couple of corporate questions as well. We're running short on time. Are Sonangol still in it for the long term?
I have no reason to believe they're not. They spent a lot of money, and it'd be most unusual for someone to want to walk away from a 50 million barrel discovery.
And is a capital raise now inevitable after Marty and Alameda failed to flow?
No, we're not doing a capital raise. You see from our quarterly we put out today that, we've got a $12 million of corporate cash. So, as an organization, we're well funded for years. When we're going to get somebody else to pay for the next stage of the work program. We'll do bits and pieces within our means and Sonangol and ourselves, but our objective is to have some. We've done the heavy lifting. We've de-risked this project. We've found 50 million barrels. People are looking for oil everywhere, more than they ever were in the last 5 years. The whole pendulum has swung back to fossil fuels, given all of the other initiatives taking longer and costing more than what people expected. People are looking for it aggressively. And so getting someone else to pay for the future work program is our job and one that we're going to deliver. We're not going to pay for it ourselves.
So what's the company's actual cash position? And can you explain to the listeners, like we're 2 years old, how the mechanics of the Sonangol arrangement works?
The cash position we released today, on June 30, we had about $12 million. The arrangement with Sonangol is we're partners. They're 70% partner, we're 30% partner, and we're the operator. So we come up with a plan, we present it to them. Once it's agreed, they pay 70%, we pay 30%.
I think that satisfies the 2 years old criteria for that question, Andrew. Thank you. Two more to finish.
But neither of us pay anything if we get someone else to pay for it all.
Is the category outstanding cash calls from the JV partner in the quarterly report money that Sonangol owes, or is this a debt facility? And how far behind is Sonangol with their JV contributions to Melbana?
It is not a debt facility. There are amounts called on our partner under the approved budget. And Sonangol's reasonably up to date. I think at the moment, I haven't got my CFO on the call, but I think the position they owed as of 31 March was about 30 million. We received 20 million from them during the quarter. We made some more calls, and I think the quarterly today has the position at about 27 million, which is all of, I think now, all of the remaining funds needed for the completion of the last well.
Thanks, Andrew. And one final question. When do you expect updated resource figures for the Amistad formation?
We had 1A resource figures received from our certifier recently, and we put them in today's quarterly. There's an additional, what was it, Chris, 32 million barrels of prospective?
Yeah,
32 million barrels of prospective, just unit 1A. So, there's a lot of oil up there in these upper units.
Thanks, Andrew. Look, that's all the time we have today. Thank you all for joining me. I'd also like to thank Andrew and Chris for presenting and taking the time to answer some questions. Thank you all for the high level of questions. We were inundated with questions today, and apologies if we didn't get to your question, but it shows the high level of engagement among Melbana's shareholders. As I mentioned before, a recording of the webinar will be on Melbana's website and social media platforms later today. Andrew, Chris, before I let you go, do you have any final comments to leave with us today?
Yeah, I know there's a lot of disappointment out there, but what we're doing in Cuba is uncharted territory in these deeper reservoirs. Remember that I'm on the same page as all of you, right? I'm a big shareholder in this company too. So everything I do and everything I have my group of experts around me do is completely aligned with all of you. So trust us, we're committed to getting the result we need, and we're not stopping till we get there.
Fantastic. That wraps it up for us here. Thank you, everyone. Have a great day.
Thank you.
Thanks, Alex.